think it's a combination of what you just mentioned, which is that Capex number going up by about 10 billion. At least the range has shifted up about 10 billion, so, which was already a very high record-breaking range for Meta to begin with. So we're talking even more after the first 3 months of the year. I think you combine that with what I saw in the Q2 revenue guidance, which was just so-so. It was in line. And I think usually Meta tends to deliver these, results that kind of blow everybody out of the water. And so when they're saying, hey, we're going to spend a lot more and we're making right about what we said or what you expected us to make, I'm just not sure if that combo really wowed people, which is probably why you're seeing the stock down a little bit here.
So, yeah, it's kind of interesting to see the pressure here. It's always a balance, right? Because you want to see these guys taking the actions here. What do you think they're going to be pressed on the call with analysts here, Kurt? Is it just that?
What we have seen from the questions the last several quarters is really a challenge to Meta. How is all of this AI spending going to pay off? And the company has done a pretty good job over the last year or so of essentially saying, look, the payoff is happening right now. It's making our ads business better. While a lot of the other AI companies are saying, hey, someday we'll charge subscriptions or we'll get people to pay for the API, Meta's saying, no, our ads business is improving every single day as a result of AI. Those other things may come later. But I do wonder, now that they have their new LLM that they released about a month ago, if they're going to start talking about the other types of ways they can make money from AI. So it's not just improving ads, but will they charge for an API? Will they charge consumer subscriptions to use, the Meta AI chatbot, for example, at some point? It seems like they have set these dominoes up to, ultimately have other revenue streams come in that are not just ads, but we haven't really heard a whole lot about them just yet.
Yeah, as a comment that came up yesterday on a sort of a big tech roundup, that the AI that we're getting from Meta platforms is, just helping us or helping Meta platforms attract, more spending for ads. That's certainly its business, but it's not exactly moving the needle when it comes to
for its own use.
For its own use, yeah, it's not exactly moving the needle when it comes to that promise of AI and what it will do for society. I want to bring back in Anurag Rana. He's Bloomberg Intelligence senior technology analyst. He's covers Microsoft, but he covers these broader questions as well. What do you make of what Kurt said and the fact that Meta platforms could potentially start to open up their AI as maybe an API to make more money from different business segments, or not move away from advertising, but just use that AI to bring in additional revenue?
I mean, to be very honest, they have to, because this is the only way they can showcase the monetization of the Capex that's going in. So far, that was coming from the acceleration of the top line. But if today's guidance is very much in line with what Street was expecting, and on top of that, they are going to spend more, then people want to know where is the ROI of that. Because clearly we can see the ROI when it comes to Google. We can also see that in the case of Amazon Web Services, and then now a little bit from Microsoft as well. But the big question is, how are you going to show it, Meta, if you don't have a cloud business?
All right, we're going to leave it there. Hey, listen, Anurag, thank you so much. Looking forward to your research tomorrow. Going back to Meta, I know, Kurt, we just want to get you in for one more question. It's got a lot of moving pieces, and this stock has been it's been a little bit under pressure.
Yeah, I guess the regulatory overhang is something I want you to end with, Kurt, and the idea of these social media trials and sort of this bellwether social media trial, and to what extent regulatory pressures here in the US, but also in the European Union and around the world, are a headwind to the company at a time where that's getting more and more attention.
It's a headwind in sort of two ways. I mean, there's the obvious financial issue here, which is that if they keep losing these trials, they lost sort of the main addiction trial that we covered very closely in California earlier this year. It was a small payout by Meta standards, a couple $1 million, but there are thousands of those cases coming against the company. And, if they start to lose the second, the third, the fourth, you start to add those up and extrapolate that out, it can be a financial thing. But there's also reputational damage here. And when you're constantly in the news because your products are being accused of being addicting or bad for mental health or bad for teens, you can imagine that is not the best, type of narrative that Meta wants when they are an advertising business, right? Do brands ever shy away? Will they ever shy away from these products if everyone starts to think they are bad for mental health? Perhaps, right? So I think it's a risk financially, it's a risk reputationally. Those things are tied certainly together in the long term, and they mentioned that as a headwind in their press release. But it's one of those long tail things that we're going to be talking about potentially for the next couple of years.